Welcome to the StockManor.com studios here in the Black Hills of South Dakota. I'm your StockManor, Brian Johnson. Didn't get a video done yesterday, but I'm going to do a weekend video here for you guys to kind of wrap it up on a Friday. We saw a slow bleed upwards after what has been mostly a very, very choppy sideways week. So good volatilities for options expiration week with a kind of a glide to the upside, which is not uncommon on a Friday, especially after the news we got. Interesting news yesterday about it. Basically, the banks came out and said, "Hey, even if Greece decides to leave the euro, it doesn't matter. We're gonna take care of it. We're gonna consolidate and find a way to fix this whole mess." Well, the markets, rapidly moved up about 15 points in the SPX, but surprisingly, by the end of the day, really didn't get much higher than that after that initial burst, and so kind of left the day wondering, well, is there going to be any confirmation? Is there going to be any follow through today? There was a little bit of that today, as you see. Markets up, at least the Dow up about 115 points today. Everything about 1% for the most part. And overall, I don't know, kind of flat for the week, flat to up. Here's the thing to take note of. I talked about, kind of getting up over these areas here, and we have now done that. What does that mean? We broke the neckline on the head and shoulders. And this is true of almost all of the indices. So now you have to enter the weekend a bit more bullish than bearish, just based on charts. Here's the caveat. This is what you want to be looking for coming into Sunday, Monday time frame. The whole Greece elections. I think that'll be on the forefront of everybody's radar coming into the new week, is how are they going to vote? Are they going to vote to leave the euro or are they not? The question is, what happens if they don't? I think there's a attitude out there that if they leave the euro, it's a no doubter. We're crashing. It's a crash and burn. I don't know if we necessarily have the evidence, to be quite honest, to support all of that. I would say that would more than likely be true. I mean, that would be far from me to deny that would certainly be a possibility. But the truth of the matter is, we don't know yet what kind of an effect that's going to have on the markets. Maybe the markets will be very, oh my gosh, what happens next, and they'll drop the markets. Maybe they'll be like, well, the banks have already said they're going to kind of take care of this, so we're good. Who cares? So you might get an initial drop, and then all of a sudden, within a few hours, it kind of works its way back up again. These will all be the things you'll want to definitely look for coming into early next week. I think it's really all hinging on this whole Greece thing. But as it is right now, what I'm going to do is, from this point forward, I'm going to ignore the news. We're not going to pay any attention to what the news may or may not be, and we're going to look at nothing but the chart in front of us, and we're going to take it for what it is. And face value is we have now broken the neckline of an inverse head and shoulders, which gives us a target of quite a ways up, to be quite honest. So we broke these overhead areas. I would say that target is probably up here in the 13.2, 13.3 range. We've got obviously a lot of things to cover before we get there, so expect up and back and up and back and up and back, but as long as this inverse does not fail within the next day or two, next trading day or two, I should say, expect this thing to maybe grind its way upwards into these areas. If we see some big gap up, that's only going to, of course, accelerate the push up and into this area, which would be the target then on this inverse. It's a very pretty inverse too, very well set up. So now it's all about, does it fail? And if it does, it should fail in the first couple trading days of next week, or do we continue to grind up? That I think is all based, once again, on this Greece thing. Of course, here I am back to news again. But let's look at it. Here it is. Inverse head and shoulders, very, very pretty. If we go to the daily look, this Dow has been strong. It's already up and over the 50-day moving average. We got to close above it today. A lot of the other indices aren't there yet. They're not catching up. The volume was good. The push was good. The internals confirmed all of it all day long. It all looks pretty. It did a very nice job in through here. So now we're up and above this 50-day moving average, which, if the bullishness continues, is exactly what I'm looking to get out of the rest of the markets. Remember this huge sideways consolidation, 12.7 to 13.2, 13.3 that we had here? We're right back into the thick of things now. After a major drop to the downside, we're pushing our way back up and into some of these higher levels. Skipping ahead to the NASDAQ on the 60, here is just what is the beginnings of almost there. Maybe it is, maybe it isn't. You can plant this any way you want to, but it's basically on the verge of breaking that inverse head and shoulders as well. Here's the neckline. And we can push this up another 5-10 points and maybe have it contained below it, but we're close enough. So you can see the NASDAQ starting to do this. It was up over 1% today, looking very strong, and that's what you want to see in a recovery. Typically, that's what you do see in a recovery, and I love, of course, to trade the NASDAQ long. So this whole push to the upside is one to definitely watch as well. You get good entries on the NASDAQ in a bull market. It's usually a much more simple trade than some of the other ones where they kind of up and back and up and back. The NASDAQ is more up, sideways, up, sideways, which is exactly what you want to see if you're trading an instrument. Those whole pullbacks are what scare the amateur traders. They don't know what to do. They panic. Do I get out now and save my money? Do I stay in? Is it going to go back up? Oh my gosh, I don't want to give back what I've already made. And they panic and they get out and then they get killed by this little pullback that eventually turns around and goes right back up again. And then all of a sudden at the end of the day, they're mad because they could have made a whole bunch more than what they did. Whereas a lot of times with the NASDAQ, you maybe don't get those pullbacks. It's up and sideways and up and sideways. Hence the reason I really like the NASDAQ for my trading, especially to the long side. Here it is on a daily, setting up that same thing. See what I mean about that neckline? We're almost there. We could be there. We can set this up one of 100 different ways. I think this will resolve itself by the middle of next week. We should have a pretty good answer as to whether or not this is going to be legit or not. Targeting what? The 50-day moving average, which is where the Dow already is and the other indices are not, especially the NASDAQ, and that is a long ways away. So up and over these areas here, you're looking at a target of that 50-day moving average. From a weekly, we kind of hammered out, a little down, a little up, a little pretty much break even. By the end of it, though, it still was 12 points, which is a 0.5%, but 12 points is okay. Major run, though. Look at the low, look at the high, and that's about a 70-point move from high to low all week long, and it was mostly sideways and very well laid out here by the daily. If you look at the daily here, you can see the sideways chop. 1, 2, 3, 4, 5. So Monday goes up, starts down, grind, back up. Overall, makes perfect sense. Even in the last 2 or 3 days of the previous week, you can see we've been chopping sideways. So this resolution to whatever this consolidation is definitely in the works. Right above us also the 20-week moving average, which is also a big overhead area of resistance. Here's the SPX. Breaking the neckline, same story, different verse. I had the subscribers, I was on them pretty hard about above 1330 long or above 1335 long. And I was very exact on that. So they made some good money on that. For the Dow, I was above 12,600 and then above 12,700 if you missed the 12.6 entry. And I was very big about that. So just as a for instance, guys, in the subscribers section, that's the difference between what you get in the subscribers video and what you get in the daily videos. I'll give you ideas of, hey, up above this area here, but as a value-added service for my subscribers, I get very exact. Hey, above 1330 and or above 1335, that's your long. That's the place to be looking at. And then, of course, we give stops and stuff like that. So if you're not already a subscriber, you need to sign up if you like that kind of precision with the trading, with the entries and the exits and stuff. That'll give you a lot more of that. Anyway, back above these areas here into 1342 made us money this week on the subscriber section. And a beautiful push, grind, just kind of a roll to the upside, basically bled its way upwards, waiting to see what the resolution is here on the grease side of things. So it has broken its overhead. This is coming back into a previous, which was kind of a, like I don't want to say it was a head and shoulders pattern, but it was definitely heavy support for the longest time, and we went right back into it now to retest it at the end of the day. Any further pushes to the upside, definitely target the 50-day, as we are with everything else now, to see if it can actually get up into that area. You notice how much stronger that Dow is? It's already up and into its 50-day, and the other indices have not reached it yet. They're close, except the NASDAQ, but they're getting there. We'll see if they can actually make it early next week. The VIX on a daily also coming back down. Now, this was curious. At one point during the day, the market was up, but the VIX was also up, like a good 1% or 1.5% at one time. By the end of the day, we're back down 2.5%. So everything confirmed as the markets rolled up, the VIX rolled down. But what didn't we get? If you've been following me at all, what do I watch for this? We did not get back below the 20. I really kind of expected that we would on Tuesday. I thought, this bullishness continues. We're going to be back. We never made it. So the VIX still stays in a sense of, let's call it concern. I won't say fear. Let's just say the markets are in a sense of concern right now, and I think it's all hinged on that grease. We're going to wait and see how that resolves itself. Good news for the markets, this thing plunges next week. Definitely back into the 16, 17 area. Bad news next week, and we stay above that 20 area and maybe even break our way back up into these higher areas before it's all said and done with. Weekly, same thing. We got up, we got down. By the time we were done, it still closed above the 20 area, and that's the most important thing that I watch. 1, 2, 3, 4, 5 now weeks of back above the 20 mark, showing more fear in the market, waiting to see if that resolves itself downwards at this point now. FAS with these breakouts here. I gave you some stuff that I wanted you to watch. This was it. Back above this 82 mark was it. Look, this little inverse head and shoulders finally played itself out, and we did get the break. You took that break. If you watched my video on Tuesday and took that break, you made some money. It was a really good trade there. The next mark is going to be back above this 85-ish mark, which you want to watch into early next week. As you can see, the same type of inverse head and shoulders as would be expected and as should be seen is being seen here on the FAS. It's an ETF that follows the financials. Of course, it's going to follow like the S&P and some of the other indices as well. So of course we should expect to see this. Interesting. By the end of the week, the volume was only on this whole thing. So this move up hasn't been all great, but once again, watching for these further pushes up and above that 85 area for your trade on FAS and FAZ, then continuing to bleed its way out. Really wasn't real keen on this. Back below 25 was the trade for my subscribers to the short side on this one. And able to make a few pennies on the deal. It didn't drop a lot, but enough to make, a little bit of money before we're done. Where is it at? The 50-day moving average. So here we go again, finding some support here. Trap between the 50 and the 20, looking to see which way it will resolve itself. That takes us back to the beginning of the video, but it gives you an idea of where we're at. The fact that we broke these inverse head and shoulders now, two things to watch for. Will the news of Greece make a difference to what we just saw happen the last couple days? And will this inverse head and shoulders be legit? Or is what we're seeing here a fake break? And I think we get that answer based on how the markets decide to digest the news of whatever happens in the Greek election. I think that'll be a big player here. Okay, I'm going to leave you with that. Subscriber video, $28 a month. It's $1 a day. Like I said, way more exact on my entries and exits and what to look for, and hey, don't miss this, along with just mentoring advice. Hey, this is what I do. This is what you should be doing. Think about this in your trading. Try this for a strategy. When you get into a trade, here's a great way to protect profits and still stretch the market and see if you can pull some more out of it. Those type of things are mentioned a lot in the subscriber video. So it's not just more analysis. It's deeper analysis, more lines, and mentoring information within it. Then, of course, the mentoring course itself. You want to make a living at this, or you want to do this full time, you got to have an education. You can't do it without some sort of formal education, and that's what the mentoring is. Once we work together, I'm there for you forever. So if you have questions down the road, send me emails, call me, write me, whatever, and I don't charge you extra. I don't play those stupid little games with it. That's not what I'm out to do. So my knowledge is worth something because you take my knowledge and then you apply it to the markets and you use that to make yourself money year after year. So I do believe that my knowledge is worth something, but at the same time, I'm not going to nickel and dime you to death for the rest of your life over the whole thing. I'm going to charge you what I feel is one flat, fair fee. Wow, say that 5 times fast. And be done with it. So if you're interested in that, would like to take the next step with your trading career, that's definitely the place to start, is the mentoring. Write me about that, and I'll send you some information on it. We'll see if it's a good fit for you, and we'll work from there. Coming into June and July, ready for some new students. So let's get on it. Let's let's get this done. So you guys are prepared for the summer, whatever's going to happen here, and you'll have a much better feel for when to get in, when to get out, and prepare yourself for this really, the next really major. You want to have experience under your belt before that next thing happens, because then you'll be just a lot more prepared for that next big move. So write me about it. I'll send you some information on it. We'll find out if it's a fit. Otherwise, we'll see you guys again next week, probably Tuesday. See you then. Bye.